And again, as always, wonderful and beautiful, glorious day it is. Ladies and gentlemen, this is the day the Lord has made. Let us all rejoice and be glad in it. It is a super Saturday. Absolutely, it is. January 24th, 2026, the 24th day already. Already the 24th day of the new year. Got approximately 8 days until the next month. 8 days until the next month. Wow. What an amazing, amazing God that we have. All right. What an amazing God that we have. All right. So what I want to do is go ahead and tap in. We're doing the Super Saturday. And let me go ahead and tap in to the go ahead and tap into the live. Let me see. That's not the way to do that. Let's see. I haven't been on YouTube in a while, a little minute. Let me see how this thing works. Let's see. No, that's not it. So, go back like this. There you go. So I don't have to look at myself. So, here is the real spill. To the left, you have Bitcoin. To the right, you have gold. These are the two pairs I mainly focus on because they are super volatile. Okay. Um, I'm telling you this. I'm be honest with you. Even if you're not as obsessed with trading as I am, you have to understand that whatever I do as an employee, the decision and outcome lies in the hands of others, not what I choose to do. So I'm just a little pawn or a little minute employee within this big, gigantic $1 million system or $1 billion system, right? And whether I leave on my terms or God forbid it's my time to leave this earth, you're gonna have some people, many people hurting, but it's not gonna impact the department. It's not gonna impact the business. So you have to think logically for yourself, not only for yourself, but for the next generations after you. Okay. So what I want to do is I want to simply and completely erase everything on Bitcoin, and we want to go candle by candle of these imbalances and things of that nature. Okay, candle by candle. Shout out to the person on the YouTube with me, YouTube Live. Shout out to you. If you put your name in the chat, I'll be able to shout your name out. All right, we're gonna go literally candle by candle, imbalance by imbalance, supply by supply, and demand by demand, and draw these things up. Okay. So literally, I took this trade right here. I think maybe about a few days ago. I took that trade. I took that trade about a few days ago, and that did my 1 to 10. It gave me my 1 to 10. So you can literally see how the stop loss is above the most recent high, the distribution high. Stop loss is right above it. Came with a sell market execution, and then sold all the way down. And obviously, you see where it says, if I highlight it like this, you see it says 10, 10.00. It means a 1 to 10. All right. Shout out to the person on the live stream. All right. So, what I want to do is I want to completely erase every single thing on Bitcoin. And what I'm going to do is a top down analysis from the higher time frame to the lower time frame. So, this game of trading is all about make sure you got a pen and paper. And I plan on being here for like at least an hour. Uh, this game of trading is all about refilling imbalances. Okay, it's all about refilling imbalances, and then when is it going to refill that imbalance? It's all about refilling imbalances, and then when is it going to refill that imbalance? Then is it going to respect that imbalance and things of that nature? So what we're going to do is I'm going to do everything from the monthly, weekly, daily, H4, H1, M30, M15, M5, and M1. All right. It's 9 time frames to be able to select from. All right. And the way you group, or the way I group them, is like this. From the monthly, From the monthly to the daily is going to be obviously a position trader. Okay, that's long term. That's an investor slash forward slash position trader. Okay, now from the 4 hour to the 30 is more of a swing trader. 4 hours to the 30 is more of a swing trading. Your 30-minute, your M30 would be your entry. Okay. And so then from the M15 to the M1 is more of your intraday and scalping. Intraday and scalping. All right. So what we want to do is this. Let's see. Go back to the monthly on Bitcoin. Oops. All right, cool. Oh, goodness. Get rid of that. Oh, goodness. Did it again. Get rid of it. Hold up. There we go. All right. So now here's the deal. Here is the deal. What's up with it, Ricky? What's up with it, bro? All right. So we on the monthly on Bitcoin, right? Now the market moves in a series of trends. Uptrend, downtrend, or it's moving sideways. Sideways range consolidating. Like it's bouncing. You got this level of resistance, you got this level of support, and literally prices just bouncing in between the two. It's having a neutral sentiment. So the market is either uptrending, creating higher highs and higher lows, right? Or is downtrending, creating lower highs and lower lows. So clearly on the monthly on Bitcoin, you see the market in a bullish trend. Bullish, the word bullish is associated with the market going up. Bulls, bullish, going long. These are words that are synonymous with the market going up. And then you have short, selling, sales. These are words synonymous with the market going down. Okay. So, and I'm telling y'all, this is a great, great, great high paying skill set. Oh, absolutely, bro. Always, always. It doesn't even matter if doesn't nobody tune in on the live stream or on my cellular communication device while I'm on Facebook Live. It's gonna find somebody being impacted in a positive way and it being valuable. Okay. So right here, you have the market doing this. Let me see. Is it gonna let me do it? Let me see. Let me refresh this. Let me refresh it. Because it won't let me maneuver and move my cursor like I want to. So I'm gonna refresh it. So Bitcoin is considered a cryptocurrency. And it's operated in a decentralized market, which means it doesn't close. It continues to print candlesticks every single day, every single second. It's not monitored by a bank or a New York Stock Exchange, anything like that. All cryptos are operating in a decentralized market. Nothing controls it. Okay. Now, gold, like more of exotics and Forex majors and Forex minors, those pairs like USD JPY, USD Chef, USD CAD, things of that nature. Those countries' currency pairs, they are 24 hours a day, 5 days a week. So Sunday at 4 p.m. Central Standard Time, Sunday at 5 p.m. Eastern Standard Time, Sunday at 2 p.m. Pacific Standard Time, the market opens. Okay. And it's printing candlesticks through different sessions. You have the Asian session being the first session. Okay. Then it's followed by the London session. Then it's followed by the New York session. And then the trading day is done for the day. A trading day is comprised of 12 hours. Then at 4 p.m. Central Standard Time, again, 5 p.m. Eastern Standard Time, 2 p.m. Pacific Standard Time, the next go around, bam, the trading day closes for the 12 hours and then it opens up again. Okay. And it opens up again. What it is, hey, these are the orders. We're shutting our doors. These are the orders for the day. And then bam, when we open back up, boom, Oh, excuse me. You knocked my mic off. But needless to say, what it's saying is this: the lower, the lower the liquidity, the lower the volatility, the bigger the impact that one of these big major players in the market can make. Like somebody, like one individual can make the market move and make a major move if they want to. It depends on the volatility in the market though. So like if you're trading during the Asian session and you're trading USD CAD during the Asian session, you have to understand in the background what's going on, which means during the Asian session on USD CAD, there is very little liquidity. There's very low volatility, right? Which means if Elon Musk, Jeff Bezos, anybody with a large cap of money or a company with a large cap of money decides to say, hey, we're going to put a large cap of money on this in the Asia session, and your order just happened to be in the market, that one transaction can make that market move, can make that pair move. Now, the higher the volatility and the higher the liquidity, which means the higher the more majority of orders and players in the market, it'll be harder. It'll be more difficult for any one transaction, somebody with a large lump sum of money, to be able to move that market. So you need to take that into consideration when you're developing your trading plan. Okay, is this pair? Do I need to trade this pair during the Asian session? If not, okay, cool, bet. I shouldn't, because if a big time player decides to put in a big order, big transaction in the market, I can get caught. My stop loss more likely to get hit. That's what I was attempting to do. You see how the screen moving like this now? That's what I was attempting to do. That's why I want to be able to move my screen like this. All right. Does that make sense? So now here's the deal. We can start from right here, since this is clean price section. Gold is at 89,174 right now. It went all the way to hit 126,000. Okay. And it came back down and dropped to refill its imbalance. Now here's the deal. We understand that the market is in an uptrend. Okay. So what I'm going to do is simply zone it out. Watch this. You have your low right here. The market, by the way, the market creates M's and W's. Okay, what do I mean by M and W? Like this. I'm going to show you. It's a harmonic pattern. One up here, you got one peak, got this retracement, you got this other peak, and then you got this what? Push down. That's an M. And obviously the opposite side would be a W. A W would look like this. You got one move, pop up, come back down, push, like that. That's a W. X to A to B to C to D. X to A to B to C to D. Now, the market always moves in a harmonic pattern fashion. You got to understand, where are you within that harmonic pattern? What pivot are you at? Are you at a low? Are you at a high? Things of that nature. And the market is always about refilling imbalances. Okay. So you're going to get caught. It's just the fact that I can only manage risk. I can't avoid losing, but the only thing I can do is manage risk. Only thing I can do is manage risk. I'm going to lose based off my trading strategy, based off my setup. I'm bound to lose. All I can do is manage risk. So I tell my team, my basketball team that I'm coaching, hey, you're going to make mistakes. The mistakes are going to happen because you're not perfect. You're not Jesus Christ. You're not a perfect being. Okay. But when the mistakes happen, let's make up for the mistakes. Let's clean it up. The mistakes are going to happen. It's part of the game. It's a part of the game that we don't like, but it is going to happen. Storms in our personal life. It's a part of our personal life. Is going to happen. This is the testament to the faith that you have in God, to the faith that you have in Him, because it's easier said than done. Hey, I have faith and nothing is going on in your personal life. You're not really battling any personal demons, but then when the storm comes, it's like, okay, that faith gets tested. So watch that. It's the same thing. So you're not going to have a bulletproof trading strategy. It's just all you can do is just manage risk. That's all you can do. That's the only thing you can control. All I can control is manage yours. All right. So here's the deal. Um, hey, my people on Facebook, we're on YouTube Live. The link is on my wall. Tap on the link in my wall, okay? On my post. Just click the link and it'll bring you right to the page. You'll see us. You see me live. All right. So, which I probably need to get my phone a stand or something for my phone, so y'all can be able to see what I'm looking at off my phone. Or you tapping in on the phone. So, but excuse me. So the market had this demand zone right here, right? Where buyers are interested in buying. The market had this demand zone right here. Buyers said, hey, this is a great enough discount level. We want to buy from here. Okay. So now what the market did was, okay, we got a low. Got a low right here. Turn is black since we're on the monthly. We got a high. We got a low. We got a high. Then the market came back down and took this low out. Now this right here is a retracement because this ended up being a supply zone right here. You see how, look at this right here. Look at this gap right here. What you have is the bottom wick of this red candlestick, which is right here. The bottom wick of this red candlestick is not touching, is not mitigating the top wick of this red candlestick. It's not mitigating the top of this red candle. So right here, the bottom wick of this red candlestick is not touching the top of this red candlestick, which means that is called a fair value gap, which means price is inefficient in that area. And at some point in time, it's going to come back to fill that void. And sometimes it's going to come back to fill that void in that gap. The market is like this. It doesn't have to do it right away, but at some point in time in the future is going to do it. Okay. So the market left that gap open, right? And by the time the market came back and hit this gap on the monthly, yeah, somebody made profit from here, right? But ultimately, it wasn't a sell from this particular supply zone. Ultimately, it wasn't a sell because the market decided to do what? Push up through it, come back down, and retest this area to then go what? Back bullish. That makes sense? Does that make sense? So, you know what? Let me attempt to do this. My people on Facebook. All right. So this is what we're looking at. All right. So what I said was the market likes to create M's and W's, right? You can see an M going, you can see the letter M going from this low to this high, this low to this high, and back to refill this imbalance in order to go bullish. This is Bitcoin on the monthly time frame. Now here's the deal. The market creates on every single time frame. We're on the monthly on Bitcoin. The market creates these fair value gaps. What is a fair value gap? When you simply have a bullish or bearish candlestick with a wick at the bottom, and that wick right here at the bottom is not touching and mitigating the top wick of this third candlestick. So now you have this big gap. You have this big gap that needs to be filled. Remember, we're playing a game of refill the imbalance. The imbalance is going to get refilled, but when is it going to get refilled? And then when it gets refilled, is the market going to simply respect it, or is it going to break through it? Now, you won't understand, you won't know that, and you won't determine that until price gets back to that area. Okay, so that's called a fair value gap. Okay, and this is a supply zone. The market is sold off of supply zones and bought off of demand zones. Okay, so I need you to understand this. The market price cycle. The market accumulates at a low. There's a market price cycle, how the market prints in order, these market price cycles. These how the market creates these imbalances. You have an accumulation, then you have a reaccumulation, then you have a distribution, and then a redistribution. And then the market price cycle starts all over. Accumulation, reaccumulation, distribution, redistribution. accumulation, reaccumulation, distribution, redistribution. So the market from this level accumulated, reaccumulated, made it to a high, created a distribution, redistribution, came to a low, came to this reaccumulation area. They did what? Accumulated, reaccumulated, broke structure, broke the old high, created a new one. Now the sellers need to come in, distribution, redistribution, bam. This is a demand zone. The market then did what? Accumulated, reaccumulated, but it did not break this old high. The sellers have done what? Came in and took control. So now this would be what? A high that went to a what? A low, created a lower high right here, and it ended up doing what? Breaking internal structure. Breaking internal structure and creating a what? New low. Now, here's the deal. This is a bit of advance. When the market starts respecting and mitigating, respecting these demand zones like this, let me use my path tool. When the market starts respecting these demand zones like this, respecting it, it's ending up creating liquidity, and it's ended up creating trendline liquidity, and is eventually going to get taken out. We don't know when, we don't know how, but it's eventually going to get taken out. So right here, you can see how this market was doing what? It respected this right here, right? It respected this right here, right? It respected this right here. Ended up taking out this trendline liquidity. Does that make sense? Having everybody thinking that, hey, you should buy off of this trend line, buy off of this trend line, buy off of this trend line, buyers are present, and then boom, yank them, stop loss got hit, absorb the liquidity. Now, the saying that goes in the market is, if you cannot see the liquidity, then you are the liquidity, which means don't become a part of the trap. That's just simply what that means. Don't become a part of the trap. All right. So now we can see, you can look at clues. The market leaves clues. Okay. So now we know that this supply zone has been mitigated. Why? Because we have this wick. We have this wick right here touching this wick right here. So that means price is efficient. There's no imbalance. So more than likely, when the price returns to this area would not be respected. It won't be respected. And you see, when the market came back to this area, what happened? If you were to draw a line right through here, what happened? The market broke straight through. The market broke straight through. Market broke straight through. So, and I'm noticing something as I'm, going through these lives and things, and that you go through these training, my personal training and stuff like that, that once the market breaks through these things, like you see how the market is efficient right here. Now, more than likely, the market was to come back here. It wasn't going to be a sell from here because it already respected it right here. It already touched and refilled this gap on this particular candlestick. So by the time that it returns, it probably will break through, retest, and then shot up. So the market is all about, we're playing a game of refill the imbalance. Refill the imbalance, right? So the market decides to, let's see, getting rid of this. Getting rid of these things so we can continue the training. See, it did not respect this fair value gap right here. Went up, created a high, came back, respected this as a low, and refilled this imbalance right here. Came and touched this wick right here. The market doesn't move at random. It moves with intention. It moves with intention. All right, let's see. That was a nice move. Somebody caught that in the world. Somebody caught that and then took this from 49,000 all the way up to probably 126,000, which is dope. All right, so I'm noticing some things as I'm going through these trainings, instructing and not only teaching people, but you know, instructing myself. So now the market decides to break this structure right here, and now it goes to refill this imbalance, and it creates a new low. It diverges. It diverges, and it changes character right here. Okay, on the monthly. This is a monthly change of character. Let me see if I can. That's a monthly change of character. You can't see I can see the divergence, but you can't really see it until we go on the weekly. Then you'll be able to see it. So, because this is the last high that simply took out this old low, created this new low, and when the market came back, it broke above all of this, created that imbalance, and it refilled it right here. So now, since we have the monthly, time frame as far as the external trend. So we're going to say this low right here led to this high, came back to this low, and created this high, came back to this low, then created this high. And now we're somewhere in between here. Now we're going to see if the market wants to respect this demand zone low right here, wants to respect it, and is probably doing what? Creating some trend line liquidity right here. It may be wanting to create some trend line liquidity right here. Okay. We don't know just yet. We can put this right here and say, hey, the market may have us buying off of this trend line and eventually want to do what? Go down lower. So we can say, hey, we can say monthly liquidity below, like this trend line, right? As of right now, game refill and imbalances. So what we want to do is now let's see how we have the weekly internal price action, internal trend was weekly. The market was bullish on the weekly. So then you had the market do what? You had that low that's on the monthly. You had the market create this high, right? Gonna turn that pink since we're on the inside of it on the weekly. Then you had the market create this low right here. Then the market went up and did what? Created this high. Then the market came and did what? Created this low. Market created this high. Then the market respected this demand zone, created this low, right? And now it went up and did what? Broke structure, and it led to what? A break of structure on the monthly, right? So then we had the market do what? Create this high, come back to this low, boom. That's a demand, that's an imbalance that needs to be refilled eventually, right? So we already had this marked on the monthly, right? So there's nothing that we need to mark on the weekly. So we need to look at internal price action. So we can remove this. This is done. Okay. So now let's see what's up. Let's see what we're looking at. When you put stuff on a higher time frame, go down to a lower time frame, it's gonna move a tad bit. It's like it's gonna be thrown off a tad bit. That's what I just like about the markups. All right. So now let's see internal price action. We have, let's see. So the market went low right here, created this high, created this low, internal break of structure, create this high, create this low, boom, broke up again. So now we see that this has been refilled. Maybe not. This in between here, this wick and that wick, that imbalance could possibly have been refilled already. Let's look in between here. We're now within this demand zone right here on the weekly, within this demand zone. Okay. To see if the market is going to respect it. And so how you do that is this. So we see that the market diverged, changed character right here internally, and led to what? it led to a break of structure on the monthly. So he had a internal divergence right here, bullish change of character, and that led to a what? Break of structure externally. So then the market in between here, look, you have demand zones. What? This bullish engulfing candlestick representing what? An accumulation, right? So you have the market doing this, a divergence change of character. So you had the market respecting this demand zone right here, this reaccumulation imbalance right here. See, the market respected that, right? Created a low, broke structure right here, right? So then, watch this. The market is fractal. The market is super fractal, so you got to understand where you are, depending on the time frame you're looking at. So let's see. We already got that low right there. Okay, came back, boom, right here, broke structure. Then the market did this. High, low, high, came back to the reaccumulation, created this low, and it broke up above, created this internal high, internal low, respected this low, broke up above. That's the monthly, came back down lower right here, and boom, created this lower high right here. And you got a lower low. All right. So now you have a fair value gap in between here. So you got this bottom wick, right? Not touching the top wick of this bearish candlestick. So if you do this, bam, a line right here and a line right here, you can see how the market did what? So you got a weekly alert. Put it because it's pink. I know about my colors on my charts, so I know what time frame I put on. So now we have the market refilling that fair value gap with this move right here, right? With that move right there. Okay. So now we need to see what's going to be the result of that. All right. So now we need to go down to lower time frames, go down to the daily and see what's happening. So now on the daily, let's see what we have. See what trend or analysis we have on the daily. Boy, this is getting difficult to hold. All right, let's see what we have on the daily. So right now we're in some type of reaccumulation zone. Right here, you see this engulfing candlestick right here. The market is reacting off of it. Okay, the market is reacting off of it. That doesn't mean we're going bullish. That's not what that means. What I'm saying is the market is reacting off of it. So we know that this is the monthly low. Okay, so now internally we can mark up our trend for the daily. So let's see what's happening. So you had that low, you had the market create this high on the daily. Then you had this low. Okay, the market created this high, came back low right here, respected that zone, broke structure, created this high, came back this low, broke structure, created this high, came back this low, tapped in, lower high, broke lower, took out that low, broke above here, created this high, created this low. So we got a break of structure above that. Ultimately led to a high mitigation right here. Ultimately led to this push right here. Broke above a high. Now we just broke below a demand zone. So let's see what's happening on H4. See what's happening on the H4. So we have all of this right here. Let's see, did the market refill this gap? You see you got a fair value gap right here. You got a gap right here. And then you got a gap right here. Market may have or may have not refilled it. So it may have refilled it based off of this right here, this reaccumulation. So let's see, what's that? So this on the H4. Let's turn this blue. All right. Let's see what's happening right here. Let's see. So we have a H4 supply zone right here that's unmitigated. You see how the market is simply imbalanced right here. Nothing has came back to hit it, so we can zone that off and be like, hey, this will probably be a future area for sellers. We don't know. We're just marking it out. You got to create the map. You got to map your way to the millions. You have to map your way to the millions. So let's see what's up. We have, let's see, this liquidity right here. Price is doing this. It's 4 hour. All right, so I can map that out as a potential supply zone. I can do just like this, like that. That covers the whole deal, from the top, the high to the low, the bottom. All right, so this is a 4 hour supply zone. This is not nothing that we're worried about today, but in the future. 4 hour supply, boom. All right. So the market created a low, created a high, came down here, created a low, high, low. So now we're in some type of range probably. Let me see if this guy, see, these two wicks aren't touching right here. And this is a divergence. This is a divergence. The market has changed character with this high right here. So I can see that this is a divergence and a change of character. So then you have this fair value gap. Oops. You have this fair value gap right here. So price is inefficient in this area on the 1 hour time frame. Nothing has came back to hit it. You have possible equal lows right here that possibly want to get taken out. So this may be liquidity. This may get liquidated. We don't know yet until we got to see what price wants to do. So right now, as far as the 1 hour time frame, you have this low right here diverging, leading to this high. All right. So you see how the price tapped into this supply zone right here. Okay. Price tapped into this supply zone. And we're going to see if the market wants to, we're going to see if the market wants this to be a lower high, and for this lower high to do this, go down, break this old low and create this new low, or somewhere in between this possible lower high and the market wanting to break low and create a new low, the bulls can stop it from happening, create a higher low, and then bounce back up and create a higher high. So that could happen as well. Just because it's sold from here doesn't mean it's guaranteed to break this low and create a new low. That's not what that means. That is not what that means. All right. So we have an imbalance. We see we have a supply zone imbalance right here to see if price maybe possibly want to continue the continuation of the sale. Okay. So what you can do is also do this. Oh, we got a fair value gap. Boom. What you can say is this. Boom. Right. You can, the market may want to continue the downtrend. We don't know, and we can get in on it. Depends on what the market wants to do. What we're doing is just mapping our way out, mapping it. Okay. So now let's see what's going on in between here. We're having large bearish candlesticks pushing through, which means the sellers are probably still in control. And then guess what? All of these mitigations right here, this lower high right here, possibly being a lower high, mitigating this, possibly one of the object of this lower high is supposed to break this low and create a new low, but we don't know if it's going to because the bulls may want to prevent it from happening. Right? Bulls may want to stop that from happening. So I have to mark this out as a demand zone because this is a potential entry where buyers can come in at. So what I'm going to do is this. I know that's a fair value gap, so I'm going to make my zone like this, from this wick, like this to this low, because this could be equal low liquidity that the market could be wanting to take out and use as fuel to push up to the upside. So I'm going to do it like this to fill that gap, to fill this low, out. So that's going to be a demand zone. This is the 1 hour demand. Right. So let me see. I may stretch this out too to cover that gap like that, because there's a fair value gap in between there. So I'm gonna cover that just like this. In between, you're gonna draw up an analysis to see what price wants to do. Um, yeah, that's all we can do. That's all we can do. Doing what we can, how we can. Let's see. Let's see what's up. We got this performing a change of character. No, that's not a change of character. Let's see. Divergence. This is the change of character right here. So price performance change of character right here. But you can see how this ended up being liquidity. All this being liquidity, it got mitigated. All of this was, hey, mitigation, mitigation, mitigation. Hey, we selling, 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 and then boom, yanked up. Now, what we can do is add the sessions to see when did that move happen. When did that move happen? We can also incorporate that. Oh man, when did it happen? This happened during the New York session. This happened during the New York session. All this ended up being trendline liquidity. Selling, 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 boom. So now this mitigating this may end up being liquidity and taken out. So we got this demand zone with this fair value gap filled as a zone. We got the supply zone with this fair value gap filled as an entire zone. So we don't know what's going to happen. We absolutely don't know what's going to happen. Um, just have to wait and see. Let's see. But this internal price action, let's see what's going on. Let's see what's popping. So we got price creating an internal lower high right here, mitigating this 15-minute M15 supply zone and selling off, continuing with the sales. So now you can see how you got a low mitigation right here. So remember, price doesn't move at random. It does not move at random. Does not move at random. So you got this supply zone need to be filled on the M5. But you had internal bullish price action right here, low, high, higher low, breaker structure, internal breaker structure, higher high, came back to this demand zone, higher low, boom, internal breaker structure, higher high, bam. What did it do? Bearish divergence, change of character, came back to the supply zone right here, lower high, bam, lower low. So you can see how the bears are taking over, and then it ended up doing what? Taking out this low and create a new low. So you can see internally on the M15, this is what this means. On the M15, we can see that the bears are in control. So then you make these little markers like this curve. Yeah, that's what I wanted to do. You can see that the bears are in control. You got what? Drew it backwards. Got the mark creating what? Lower high. And then let me mark this purple. M15 drawing. Boom. Then the market is breaking lower. You got this right here. Market still breaking lower. All right. Then we got this move right here. All right. And then you got this supply zone right here need to be refilled. Here's supply zone that need to be refilled right here. We got, let's see, we got this one right here. This is supply zone need to be refilled, and imbalance that needs to be refilled right here on the M15. So this may be used as liquidity in the future. We don't know until the market does what it wants to do. M15 supply. Boom. All right, got that. Then we have another supply zone right here that can simply get refilled. That needs to be refilled. It can be used as liquidity. We don't know until the market decides what it wants to do. So bam, it's another M15 zone. Bam. All right. Cool. Then we have what? You have a redistribution in between here. A little bit of trend line liquidity right here. Bam, we got our redistribution. That's a supply zone as well. So, but we don't know if the market's going to respect that area or not, but we have to draw it out. Remember, we got to create our map. So boom, this is a supply zone. So deal right here from the high to the low, supply zone. It has to get refilled. Supply zone. All right, cool. So now what are we looking at? Let's see. So we just broke a low on the M15. We just broke a low. So this is an internal break of structure. Okay. Now, that doesn't mean we know on Bitcoin, the overall trend is bullish on the monthly. We know that. So internally, we're looking to see if we can take advantage of a retracement or anything like that, a counter trend trade or something like that. That's what we're looking for. We see on the daily hasn't fulfilled. The daily hasn't fulfilled its obligations as far as saying, hey, we're going bearish. Okay. Because remember, look, we got the high, low, lower high. There's a problem. I mean, we got the high, low, higher, higher low, and possibly wants to create a higher high. We don't know, and we can't make that assumption. Okay. But now we need to see what's going on in between here. So let's see. This may be trend line liquidity right here. We got mitigation. Maybe want to take this out too. So you got this performs a type of trend line as well. Got to see what's going on here. What's this daily? All right, let's see what we got going on. So we know on the 1 hour, let's see, the 1 hour hasn't even established and say that we're going bearish yet, because you don't have this lower high attempting to create a lower low yet. It hasn't broken through this low yet. And so in between here internally, we're looking at the M15. We know the M15 is bearish because we got what? We got this lower high, lower high, lower high, still pushing low, breaking structure, pushing lower, right? So let's see. M5. What are we looking like? Still pushing low. You see, respect. Got demand zone right here. This demand zone couldn't push higher. Create a lower high. Tapped into demand. Boom. Push lower. Push lower. So here's the deal. So now on the M5, you got the market doing what? Or you can do it on the M1. You can do M1. So market mitigating. Bam. We got a 1 minute supply zone. Boom. Lower high. Went to do a perform, break low, create a new low. Right. So now the market is either going to do this as a retrace. I'm gonna tell you this. The market is gonna either do this, like this, retrace, then go back up, or the market is gonna be a pullback. Right now, it's performing a retracement. Right now, it's performing a retracement. So I can see this accumulation, reaccumulation, pushing upward, looking for some type of supply zone. So this has been mitigated. This has been mitigated. This has not been mitigated. So, but this is the this is where it came from. So let's see what's up. Let me see what's up. Push higher. It's been mitigated. This has been mitigated. So yeah, that engulfer candlestick has been mitigated. Okay, this was a nice move because now this just got mitigated. This supply zone right here just got mitigated. Yeah, this supply zone right here just got mitigated to look for a push down. But see, here's the deal. Here's the deal also. My thing is, when it shows them 3 candlesticks like that, this is probably a retracement on the bearish end. It went to mitigate it, but it may not break this low to create a new low. It may stop and it may push back up. That's my anticipation from the way these candlesticks are developing now. So it may respect this demand zone right here, but you got to realize that the respect of this and this has created liquidity. So we don't know if it's going to hold or not. And you see how it's pushing through? So my thing now is this. Because we have this mitigation right here, it mitigated this supply zone right here. It didn't mitigate this one. So it hasn't fulfilled this 1 minute supply zone right here. It went past this redistribution. Now, supposedly this is supposed to be supposed to make a new low. If it doesn't, then the market will pop back up. That's just simply how you trade. It's just simply how you trade, like trading one-on-one. See, this turned out to be, but see, it's an engulfing candlestick right here. So I'm not going to take a buy from this level. This turned out to be an engulfing candlestick. So I'm looking at this being a distribution, redistribution, break low, create a new low. That's my anticipation. And so let me look in the 1 minute time frame right here on M1. Looking at this, so this is a demand zone right here. So let's zone this out. The market could be respecting this demand zone, but just could be penetrating a little bit deeper. Could be penetrating a little bit deeper. All right, so this is an M1 demand. All right. So look, this liquidity was taken. See? Liquidity was taken. Boom. Hey, buy here, buy here. Came back. Whoop. Broke lower, create a new low. So now my anticipation is that the bulls come in. My anticipation is that the bulls come in. I believe this demand zone to hold up. So like I'm looking at this. You got a mitigation here, mitigation here. So this was liquidated by this move right here. Fueled higher, push up, came back demand, boom, lower. So right now the sellers are in control, but I'm thinking that because we have this, let's see. I believe that the bulls are going to take over. But what I want is some internal price action. I want a low, high, higher low, and then break up above. I'm going to show you what I'm going to draw out what I want. This is what I want to see. I want a market to be able to do this. Low, high, higher low internally, then go to take this out externally. Take that out. That's what I want to see. Then I'll get in. I can get in for a buy entry. So now, right now, we got an engulfing candlestick. That just means, hey, we have some got some bullish sentiment, some signs of wanting to go bullish. That doesn't mean it's going to. Let's see what's going to happen. Then I'm looking at all of this being a mitigation. Boom, taken out. So this created a lower high off of this 5-minute zone right here. So let's do it like this. We had a 5-minute zone right here. 5-minute M5 supply zone. Mark create a lower high, broke lower, create a new low. But I believe because this is a bearish engulfing candlestick, like I said, signaling a distribution, the market then creates a redistribution and then wants to accumulate. I don't see a redistribution yet on the M5. So my thing is that the price may push through this, but it could, but this still is an opportunity for the market to be able to buy from internally because you got this internal breaker structure right here. So it still is possible, but I got to see price confirmation, my divergence and change of character and things of that nature. See, you had another bearish engulfing candlestick. So let's see. I'm just marking up a little structure on the M5. That's all I'm doing. Just so I can see it visually. All right, so this mitigated a redistribution supply zone. So it's going to end up getting liquidated. This is liquidity right here. It's going to end up getting liquidated eventually. All right, let's see what's up. Let's see what's going on. We still don't have no external breaker structures though. We still don't have external breaker structures. We still got stuff pointing lower. But this may be the move to push back up that the market wants to do. We don't know yet. We got to see what's up. All right. Is it going to come back or is it going to go straight for a supply zone? Go straight for a supply zone, you abort the buys because it just told you it wants to retrace. Excuse me. Okay. It just hit a redistribution. Just hit a redistribution supply zone. It doesn't mean necessarily I'm going to take a sell. Gotta wait on my confirmations. Because price did create a little miniature divergence, change of character right here. So then you can do something like this. This is a divergence and change of character inside of this another M1. So I got to see what's up. I can explain to you candle by candle what's happening every single time. I understand what's happening. Even my lessons that I take, I understand what's happening. Oh, goodness. So we have a fair value gap that's created on the M1 time frame right here. So what I'm going to do, I'm going to reach this to this high like this to cover that gap. That's how I do the demand zone. So you got a fair value gap right in between here, these two. You got this deal right here, and then you got this deal right here. Fair value gap. Don't necessarily mean that it's going to respect that and then go up. That's not what that means. Just mapping it out. Goodness. So as of right now on the M1 time frame, what we have is this low when created, this high. So the gap has been fulfilled. So then you remove this. Got fulfilled. Now we did a straight line. We did a straight line back to see, now I'm about to take a buy entry. Is a straight line back to the demand zone. It's a retracement. Well, I'm looking at it as a retracement right here. I'm looking at it as a retracement because this did a straight line back to a demand zone. So I'm looking at it as a higher low, a possible higher low to have this internal breaker structure and create a new high. That's what I'm looking at it as. So um, they executed me at 89,065, 80. You see the settings. 89,065, 80. All right. And so then my stop loss is obviously going to be below this zone right here. And then my TP, my overall TP is always a 1 to 10, but I take partials in between. All right. Which reaches to this M15 supply zone. So if it does that, if it wants to do that and retrace and hit that, obviously we'll be grateful. You feel what I'm saying? We'll see what price wants to do. But we're going to manage it and take partials accordingly in between. So let's see. We're looking at this as far as right now, this possibly being a higher low. So then what we want to do is when it breaks that structure, we probably want to go break even or take partials. Let's see what's up. We got our stop loss below this low. The stop loss is 89,024.97. 89,024.97. All right. And don't be greedy. I'm talking to myself as well. Don't be greedy. Like, take your partials. I don't care what number. I don't care if it's $1 or $2. Like, don't be greedy. This thing wants you to be greedy, but don't be greedy. We're in the profit taking business, not wanting to be greedy business. 89,476.59 is the overall TP. $59. So now we're gonna monitor it. Once we take partials or go break even, we're gonna let that thing ride, Clyde. All of this is liquidity. All this is liquidity to me. Mitigation, liquidity. All of this is liquidity to me. But it depends on what the market wants to do. Hey, Pepper. Hey, baby girl. Because once we cross over into seller's territory, we need to go break even at least minimum. Let's see. The market did break above the high. So let me see what's up. So we do have an internal breaker structure right here because you can see how this high took out this high. So we do have an internal breaker structure. We do have the market attempting to retrace, which is great. And if it pops back up again, we're going to go ahead and go break even. I'm not taking a partial until the market breaks up above here, but we're going to break even. This is my TP1. So we take a message, TP1 hit, just in case I take my eyes off of it, which means the market broke that last lower high. Sorry, we're going to go break even right now. We're going to go break even at 89,070.38. All right, we had break even. 89.070.38. We had break even. Risk-free trade, baby. Risk-free trade on live. Live doing it. Look at it. So took an entry right here, right? Took an entry right here. We seen the divergence. We seen the market break lower, create a new low. So I saw the market mitigate this on the M5 time frame. You see on the M5, and what they're gonna mitigate this imbalance, simply create a lower high, broke lower, create a new low. What I seen this market creating this straight line stream, and on the M5 time frame, you can see how this created engulfing candlestick. So I was saying, okay, cool. Engulfing candlestick means a distribution. So you got a distribution, redistribution that breaks a low, creates a new low, right? So now we're in a demand zone, and we're in an M1 demand zone, right? And so what I'm looking at, I look to the left, I see, okay, cool. Price broke structure right here. Had an internal break of structure on the M5 time frame last time. So this is a demand zone and imbalance that needs to be refilled. So the market created all this right here to come back, and it was doing its thing, right? And so now we're looking to see if, okay, the market takes out the old low, creates a new low. Here's your divergence and change of character, right? Here's your divergence and change of character. You have to go on the second time frame to be able to understand and see it. So So here's the deal. The market was supposed to respect this bearish engulfing candlestick right here as a supply zone and create a new low, but it didn't. Broke up above it. So here's your what? Bullish change of character. The market came off a redistribution supply zone, created what? A high. So this low led to this high, retracement, distribution, redistribution to refill the imbalance. And we're going to take a buy entry because I knew this was a retracement, because the market did not, after this engulfing candlestick, it did not retest the engulfing candlestick first, which is a supply zone, in order to start a bearish trend. So it didn't start a bearish trend. It just came back to refill this imbalance. 3 consecutive bearish candlesticks to a demand zone. Bam, we took a buy entry off of this particular candlestick. And then you can see with this candlestick right here, this is denoting and saying, hey, we have bullish interest, because it attempted to spike down and the bulls pushed it back up. And so now you have this internal break of structure right here, which we are already at break even, and we're just letting the rest ride. So we're at a risk-free trade already. We're just seeing what the market wants to do. We're just seeing what the market wants to do. So as a matter of fact, I'm gonna put TP1 right here, because this supply zone can be respected. The market does not have to break this high. So I'm assuming that it's going to break that high. So it's at least, we know for sure, going to mitigate this, and we could take a partial, and then we could let the rest ride to TP, our big win, which is a TP2. So already at break even, right? And so now we're looking for the market to smack. Bam. There we go. Market has officially mitigated the supplies on the smack. So what we do is we take a partial. Close 50% of my position, and then I let the rest ride. And that's just simply how I trade. Simple as that. Didn't want to assume that the market is going to break above that high, because I have no evidence that the market is going to break above this high, because that's the last lower high in the market on a 1 minute time frame. But we know that this is a supply zone that led to the break of this low to create this new low. So now this may be just a retracement to refill that, and it may want to do what? Go down to break this low and create new lows. But we already took partials. We already took a partial on our trade. So that's a winner chicken dinner. That's a winner chicken dinner, and we're gonna let the rest ride to overall 10%. Yes, ma'am. Yes, ma'am. Are you gonna eat? Yeah. Huh? Yeah. What? Yes. All right. So let's see what's up. So that's gonna simply be all. That's gonna simply do it and conclude the session because we're already at we already hit break even and we already hit TP1. So now working on scaling this account with discipline, with absolute discipline. So cool. And we already took 50% partials. We already hit break even, and then we hit 50% partials our TP1. And so now we're letting the rest ride. I don't need to watch the trade anymore. After I hit TP1, I don't need to watch the trade anymore. So I appreciate each and every one of you for taking time out of your busy schedule on Facebook Live and on YouTube Live. I appreciate you all for taking time out of your busy schedule to listen to what I have to say. It is always greatly appreciated. I will never ever take it for granted. Have a safe, blessed, productive rest of your super Saturday. Know that I love you, and as I always like to say, God created us on purpose to fulfill a purpose. So what purpose are you willing to fulfill? And I always remember, don't be one of many, be the one. Y'all take care, and I'll see y'all on the future live.